This is the market summary brought to you by StockMarketSquawk.com. In top news headlines, rumors continuing on the street that media conglomerate Walt Disney Company is eyeing on-demand video streaming and entertainment company Netflix for a possible takeover. Stock NFLX soaring more than 4% in active trade today. This follows the rumor mill last week, where Mickey Mouse's company was said to be looking at social media microblogger Twitter. But that chatter has died down recently, and now there is a report out by Bloomberg that Google has hired an advisor to help evaluate a bid to buy Twitter. And the stock was jumping over 4% today as well. So TWTR jumping up in active trade. And more bad news for international banking services giant Wells Fargo. The Californian bank facing another setback, and this time it's from another state. Illinois State Treasurer Michael Frerichs announcing today that Illinois will suspend $30 billion in investment activity with Wells Fargo. Frerichs says that the bank's actions are downright shameful and that the state is suspending the use of the bank as a broker-dealer for investment purchases for 1 year. And in the latest comments from the Fed, in a Bloomberg TV interview today, Cleveland Federal Reserve President Loretta Mester is insisting that the U.S. Central Bank could raise interest rates at its next meeting, which is due on November 1st and 2nd, even though that is actually only 6 days before the presidential election. So that was a surprise to many today. Mester also stated in her TV appearance that politics do not come into our decision. Now, Mester has voted in favor of a rate increase at the most recent Fed's meeting last month. She also said that a rate hike would extend the expansion. The Fed did hold monetary policy steady last month. And on the economic calendar, U.S. data showing that the Institute for Supply Management of 400 Purchasing Managers survey indicates industry expansion in September with an upbeat number of 51.5, above expectations and up from the previous number for August of 49.4. A number above 50 indicates expansion. But the Census Bureau's construction spending report showed the amount builders spent on construction projects actually fell 0.7% in August. This is the second straight month it dropped and is at the lowest level in 8 months, with weakness evident in both public and private sectors. Moving on to U.S. vehicle sales that came out today. They came out high, but not as much as hoped for by auto stock investors and market player hopefuls. Auto sales went up more than expected for September at nearly 17.8 million cars and trucks that were sold domestically last month. Now that topped out the 17 million that was sold in August, so that was good. It also beat forecasts, but actually when you break down the numbers, they're not looking too hot. I mean, we see Ford Motor monthly sales falling 8%. General Motors sales slipped 0.6% last month, and then Fiat Chrysler automobile sales, they actually fell down by 1%, and we've had a 6-year climb in car sales, and this recent report just shows that, and other recent sales reports in auto shows that that climb is kind of leveling off, and we may have reached the peak here in recent years. And then in market action, U.S. stocks closing lower across the board on concerns over German bank Deutsche Investment Bank's financial condition, and there's also renewed concerns over how Brexit is now affecting the ebbs and flows of the global economy. We also had some mixed economic data. You know, I just mentioned some of the data out today, and then of course we had some last week, mixed data, but some upbeat news. What that's doing is leading a lot of investors and other analysts that we speak to think that the Fed may actually have what it needs, at least to say that it can support an interest rate increase, and possibly that could come sooner rather than later, and you know, later than many were expecting, maybe later in 2017 or somewhere possibly in that first quarter, but now they're saying, hey, maybe it can come sooner. At the close today, we did see the S&P 500 fall 7 points or 0.3% to 2,161. Big declines by utilities and real estate stocks. They're very sensitive also to interest rate changes. Then the Dow Jones Industrial Average fell by 54 points or 0.3% to 18,254. And the tech-heavy NASDAQ, that fell by 11 points or 0.2% to close at 5,301. In stock movers today, we also looked at Tesla Movers with a ticker TSLA. That stock rising over 4%. The electric car maker posted really solid earnings, the strongest quarter of sales ever, and it also had reinforced its guidance, and sales in the fourth quarter could be better than the third quarter. And so anyway, overall positive report for Tesla. Also in other market action, we had crude oil prices jumping up today and finishing at multi-week highs. Crude oil, WTI, finishing up 1.2% or $48.81 a barrel. And there also was a solid movement by the U.S. dollar against major rivals, and that actually offset gold prices, and gold settled just slightly higher at 0.3% at $1,312.70 an ounce. That's actually one of the lowest levels that we've seen in a couple weeks. And also today, for some, we saw some corrections, market falling today, but not too sharply. We still did have strong gains when it comes to quarterly finishes for the indexes, major stock indexes last week, as Friday, of course, was the last day of the third quarter and trading for the month of September. Well, that does it for our market summary. Thanks for watching. This has been brought to you by StockMarketSquawk.com, a real-time alert and aggregation service for traders and investors worldwide. Visit the website for a free trial and sign up for a special introductory rate. Thanks for watching.